Welcome back. The results of CNBC's latest Millionaire Investor Survey are in, and while the group feels bullish about future returns, there's one thing weighing on sentiment, and Robert Frank is here to tell us what it is. Robert?
Well, John, Millionaires still holding a lot of cash, and they're worried about Washington. The CNBC Millionaire Survey, that's where we poll those with investable assets of at least $1 million. They found that most millionaire investors say the S&P will be up at least 5% next year. Over 20% expect double-digit gains in 2024, and 21% expect markets to be flat. They plan to keep about 40% of their portfolio in stocks next year, 18% in fixed income, and still keep a lot in cash, with 25% of their investments held in short-term money markets and cash equivalents. Their favorite sectors for stocks next year are tech and financials. When it comes to the overall economy, millionaires are a bit more bearish. 42% say the economy will be weaker or much weaker next year. Only 30% say it will be stronger. The biggest risk to the economy next year, they say, is government dysfunction. Inflation's still also concerned about the economy, along with national debt. Now, when it comes to the Fed, only 27% see a rate cut in the first half of next year. 40% say the second half of 2024, and more than a third of millionaires say the Fed won't cut rates until 2025 or later. And John, given that Fed pivot on Wednesday, obviously if we took that poll today, it'd probably be a little bit different. But interesting how going into this rally, millionaire investors who, after all, own 85% or more of individually held stocks, they were not positioned for a market rally. They're holding a lot of cash and planning to be defensive next year.
Yeah, Robert, I mean, you're our wealth editor, so in a way, talking about millionaires, mere millionaires with you is like low rent. But I know you keep tabs on this stuff, so either from the data or from conversations you've been having, how does this relative optimism about equities, about the stock market, square with what's happened in the past? And if they're optimistic, why hold this much cash? Do they think there's going to be some different opportunity in another area like real estate that they want to hold that for?
Well, if you look at millionaire investors and even higher level investors like family offices with $100 million or more in net worth, you know, they've basically, the past 2 years have been a story of moving out of public equities into treasuries, into cash, and into private markets and credit. And it's not so much that they're still bearish on next year. They are still bullish, slightly bullish on next year, thinking that the Fed will cut rates. They just didn't think the Fed would cut rates quickly, and they also don't think that that will generate a strong enough economy, generate strong returns. So they were not positioned last year and this year for a market rally. They're probably going to be better positioned early next year, but they certainly were not expecting this end-of-year rally that we're having now, and not expecting early rate cuts in the first half of next year. So we could see some of that cash, and there is a lot of it, moving out of their portfolios into equities and probably bonds in the first quarter.
Okay.